Welcome back, investors, to the Investing with Our YouTube channel for another video. If you're new to the channel, I am a UK-based investor focusing mainly on US stocks, and I started the portfolio I will be showing you today in April 2021. I am fortunate enough to have gone past the golden milestone having a 100k portfolio, and I'll be showing you the ups and possibly more importantly the downs of my investing journey. This includes the buys, the sales, and the dividend income I receive. So if you're a returning viewer, smash that like button. If you're new to the channel, subscribe so you can follow my journey. Now, let's get into it. This week's video is going to be focusing on the first week of July. If we look at the portfolio right now, it's gone past the milestone of 111,000 just, but that's inclusive of a £1,000 deposit I made earlier in the week. But overall, we are up 0.4%, so £547 for the week. So as the video suggests, I bought a new stock, and the new stock is Oscar Health. So Oscar Health, founded in 2012, is a technology-driven health insurance company focused on simplifying and personalizing healthcare with cost management through AI-driven analytics. Its business model is designed to deliver affordable, user-centric insurance plans for individuals, small groups, and Medicare Advantage markets. And I believe this company is undervalued currently, and here are some of the reasons why I'm investing. So there's strong revenue growth. So their market cap right now is about 3.6 billion, and their revenue for 2024 was 9.2 billion. I think that's massive for a company with a market cap of that size. So let's have a quick look at that. As you can see, revenues are growing. Generally, the stock market rewards companies with growing revenue with share price increase. And if you look at the quarterly, they're now profitable for the first time. So the reasons why the revenues are soaring is because the memberships are growing 41% year over year, and now they have 2 million subscribers to their service in Q1 2025. Now, one of the things I really like about Oscar is the huge amounts of free cash flow that it generates. Now, let's have a quick look at that. So their free cash flow for 2024 was 950 million. This is a big amount for a company with a market cap of only 3.6 billion. In fact, in the last quarter, they had $869 million of free cash flow. This is really huge. And free cash flow is important because it gives a company financial flexibility. They can do things like make acquisitions, do share buybacks, and lots of other things to increase shareholder value. They also have less than $300 million in debt, which means they're growing quite independently, which shows a good business model overall, or good operational efficiency. So these are some of the things why I invested in Oscar. So I ended up buying just under 410 shares in a few tranches, and my average price is $16.59, and it's currently trading at $40.40. So a bit of a dip occurred after I bought it, but that's fine. Long term, I believe this company, with the fundamentals that I showed you, is going to go up. So how did I fund it? So I trimmed quite a bit of my MicroStrategy position, which is something I always wanted to do. Bit untimely as Bitcoin really soared in the last week. So let's have a look at Bitcoin price. So in the last week, it went from about 110 to hitting all-time highs of, at one point, almost 119,000, but settling at 117,000, which meant that after I sold, MicroStrategy shares went up. But I'm okay with that because I wanted to trim my position in MicroStrategy, because even though I'm very bullish on Bitcoin, the dilution that MicroStrategy was implementing to shareholders was a bit too much, and I think it's going to continue, which is something I don't really like. So I sold £3,000 worth of MicroStrategy shares for a small profit of £174. I sold some more of it later on for another £1,000 for a profit of £56, and I ended up buying Oscar Health. I trimmed some Apple shares as well, so I sold 6.4 shares for £1,000 for a £59 profit, and I bought more Oscar Health. So overall, £5,000 in Oscar Health. I wanted to implement some risk within my portfolio, and this is a risky stock, but risky stocks have the potential to go up really high. And even if Oscar doesn't improve or grow any of its revenue and it keeps it at the same level, it's predicted to go up by 100%. So this is one of the reasons why I bought it and why I'm quite bullish on it. So another thing I want to talk about is a major milestone. in going over the 500 subscriber mark, which is something I'm really happy about. I really appreciate all of you guys watching my videos, and I hope that you're gaining some value out of it, either to be motivated by starting investing or continue investing. So again, thank you very much. And if you're a subscriber, just to celebrate that, please hit the like button so other people can see it and gain value too. So let's have a quick look at overall positions. So Google up 4.2% and ending the week on $180. I'm always monitoring Google's position because it's the largest holding within my portfolio. So that one's had a good week. Visa up 10%, Imperial Brands up 62%, MasterCard up just under 5%, Meta up 21%, Microsoft, which hit an all-time high, going past $500 and holding, so that's performing quite well. Carnival maintaining its plus 100% position for the week. It's up over 21% for the last month, so another one that's doing quite well. Tesla up 41%, recovering a bit since going down to under $300. So no spats with Trump this week for a change, so that's quite good. MicroStrategy, the big performer for the last week, up 16%, with Bitcoin hitting all-time highs as shown earlier in the video. Oscar, my new position, down 12% because there was some analyst downgrades after I bought, but this is okay. As we saw in the fundamentals earlier, if it continues to perform that way, the share price will rise. That's not an issue in my opinion. Amazon up 16%. Nvidia having a strong week too, up 3.5% and hitting all-time highs and becoming the first company to hit the $4 trillion market cap, which is amazing. Now, my position in Nvidia is actually not that big. It's only 3.7% of my portfolio. And the reason why it's not so big is I thought, so at the moment, Nvidia is doing about $40 billion revenue a quarter. And I just didn't think that companies will continue to spend that kind of money every quarter. But it seems to be continuing. This love for AI within the market is continuing. And the guidance from Nvidia is going to keep continuing. But at some point, it will stop. At some point, companies can't keep spending that much capex on these chips. But for now, it's going well. But that's one of the reasons why Nvidia is not such a big holding within my portfolio. Elgin up 2.75%. AbbVie up 24.5%. This one had a decent week at up 1.82%. Broadcom. Now, this one quietly has been quite a strong performer. If you look at the 3-month stock chart, it's up 50%. One of the stronger performing semiconductor companies out there. Centrica up 40%. Rio Tinto, it actually went up this week. So finally, a bit of movement, up just under 5% for the week. And let's see if this one can recover at any time soon. But it's a big dividend payer, so I'm actually up on this position if you include dividends. Costco up just under 20%. Apple, it actually is doing all right recently, up 5.9, just under 6% for the last month. But I've decided to trim it because of this. Look, it's down 8% for the last year. It's just not, it's not innovating quite well. It's not doing great things with the massive amounts of cash reserves that it has. But this week, it started to implement some AI within its portfolio, which is one of the reasons why it's gone up a little bit. But I trimmed some to buy Oscar. ASML down 6.3%, but this stock is moving in the right direction. And I think they've got earnings next week, I believe. And if they do well, then the share price is going to recover. But overall, the fundamentals of this company is very, very good. So KLA up just under 12%, and this company has done really, really well. If you look at the last 3-month trajectory, it's up just under 38%. So recovering really well and getting close to that $1,000 mark. So that's it. Thank you very much for joining me on this update. Overall, a small gain of 0.4%. Going past the £111,000 mark is something that I'm really, really happy about. Please give this video a like. If you want to continue following the journey, then subscribe, and I will keep you updated, and see you on the next video.